As always, we start with a look at global energy commodities. Brent crude was up week on week by 3.42%. Interestingly, Trump did make an announcement that he had something to say about Russia next week, which means we face the prospect of new sanctions on Russia and, of course, a key oil producer. So the markets there went up, closing trading at $70.48. WTI crude was also up week on week by 3.3%. Natural gas was down by 0.3%. And RBOB gasoline was up by 3.79%. Let's take a look at equities. It was a really great run. I think it was a 7-day winning streak, actually, for the all share index on the Nigeria Stock Exchange to close markets week on week at 4.26%, 126,149.59 points. Deals, gosh, look at that, the number of deals, pretty hefty there compared to previous weeks. And the volume of deals also here at 1.3 billion shares, value at 30 billion, market cap trickling very close to that 80 trillion naira mark, up week on week by 4.5%. Let's look at equities from around Africa. Not a bad look, with the exception of Nairobi, which is down by 1.31%. A great deal of civil unrest and political risk there in the East African nation of Kenya, which is weighing down on market and investor sentiment. But Johannesburg Stock Exchange was almost flattish, up by 0.04%. Accra was up by 1.23%, and Casablanca in Morocco was up by 1.8%. Now let's take a European markets. It was a green sweep for Europe, a very green sweep. Euro Stock 600 was up week on week by 1.03%, although at the end of trading on Friday, the market was down by about 1% from Thursday. But we're looking at the week on week figures here. Of course, Euro Stock 600 has been really blazing the trail, if you like. FTSE All Share Index in London was also up by 1.34%. The Germany's DAX was up by 1.9%. Spain was up by 0.26%. Now, my top picks from around the world. We start, of course, with the big news that one of Nigeria's largest financial bank by market cap currently for Guarantee Trust holding company on the Nigeria Stock Exchange is about 3 trillion naira. It became the first Nigerian bank during the week to list directly on the London Stock Exchange, not through Global Depository Receipts, GDRs. Of course, this is really a big boon to its bid to tap into global capital markets. Of course, GT did embark on its recapitalization push last year and has finally done an international listing. The CEO of GT Co, Segun Agbaje, has said the company is targeting a yield of about 15% and a return on equity that's around 25% and above. So good news there for GT becoming the first Nigerian bank to list directly on the LSE. And of course, the bank has also said that by the end of this month, it plans to delist its GDRs due to low market participation. So this is quite a big move here for the Nigerian banking sector. Will other banks follow suit? Time will tell. Now, Dutch pension funds, as part of a wider European bid to overhaul the retirement space and the pension market, are set to offload about $135 billion worth of Eurozone bonds. Dutch pension funds are one of the biggest investors in long-dated government securities in the Eurozone. Pension funds like APB, PMT in the Netherlands, of course, at the forefront of this move. And this is part of a wider strategy that started in the last year to really encourage more high-yielding investments for pension funds and also ESG-compliant investments. Of course, this may be a bit of a challenge for countries like Germany and France, who obviously rely on sovereign issuances to fund things like green energy and infrastructure. And the implications of that, because Dutch pension funds are some of the biggest, largest holders of Eurozone government bonds, is that we're seeing a bit of markets have been riled, actually. Yields have been coming up as the price of those bonds are coming down. This may have an implication on interest rates in the Eurozone. Of course, there are concerns that these funds need to move from more conservative yielding assets like fixed income and into more perhaps high-risk, high-return assets like corporate equities or even, corporate equities or some of the corporate bonds that are issued by corporates in the Eurozone. So the Dutch pension funds are here fueling what is a major and step change in the pension and retirement market across the Eurozone. Implications here for the yield curve, implications here for interest rates across the Eurozone. Concerns around inflation, of course, have fueled the concern that some of these investments for pension holders may not be as profitable as thought. So is this a permanent shifting strategy that will influence the rest of the Eurozone? Ethiopia has secured a $1 billion facility from the World Bank as part of efforts to liberalize its economy. Of course, in recent weeks, we've seen the government liberalizing the financial services space. It means that with this $1 billion facility from the World Bank, the total amount of funding that has come from Bretton Woods institutions to Ethiopia in the past 5 years is now topping $7 billion. Around $300 million of this new $1 billion facility will go into sort of climate resilient infrastructure and agriculture. And the government estimates that this will actually help the country achieve its investment targets in long-term infrastructure. So Ethiopia has been on this road for a while. It's had to pursue a great deal of reforms and liberalization across the FX market, key regulation, currency regulation as well, and of course the liberalization of the financial services sector. Donald Trump has threatened a 10% tariff on countries that are aligned with the BRICS nations. So that means countries that court the BRICS for trade and other types of economic partnerships may be in the eye of the storm insofar as Trump is concerned. Of course, the BRICS nations, Brazil, Russia, India, China, South Africa, and more recently, the UAE and Iran have also joined the BRICS, although the acronym hasn't actually changed for them. But there's a concern around what this could mean. In fact, the World Bank is estimating that if this 10% tariff does happen and is implemented in the next year or two, we could see about 0.8% taken off global GDP as a result of the tensions and the economic downturn that might result from that tariff imposition. But Trump clearly not relenting. You would have seen the news just in the last 24 hours or 48 hours of the imposition of a 35% tariff on Canada. And of course, the European Union is still in the eye of the storm in terms of Trump tariffs. We're getting closer to whether that will actually go ahead, but the prospects are now increasingly high. Finally, Dangote refinery is to build a fuel tank in the southern African country of Namibia in the Walvis Bay area. And the idea here is that storage facility will do diesel, aviation fuel, and a few other types of refined oil products. And the idea is to help serve landlocked countries like Zimbabwe, Zambia, and Botswana in southern Africa. So this is part of a bid to really help to become a key strategic source of energy and fuel for those economies in sub-Saharan Africa. The tank will probably have a capacity of around 150 million liters, we're told. Dangote has also said that over the next 2 years, it will move to source 100% of its crude requirement from Nigeria. Currently, 80% of the crude requirement for the refinery, to be processed through the refinery, is sourced from Nigeria, but that is expected to reach 100% over the next year or so. That's it for my top picks from around the world.